Welcome. We are back with Sub Laid Back D, Dave, Tenderfoot, AK, and Nick in the chat. Yeah, it's been a sideways week so far for the market. On Sunday I streamed and we talked about a lot of individual charts that were showing quite a few variables, and you have had certain stocks outperform the overall indices this week. We're going to look at some of those charts. And for right now, as you saw in the title of the stream, it's really just do or die for the SPY. You know, we had that good uptrend. Let me head over to that chart for 1 second. We had that nice uptrend for pretty much the second half of December going into the first month of this year. And then February was a pretty rough month for the market, giving back about half of those gains from the prior 2 months. And now we've come halfway back down from that rally, and we are sitting at a make or break area. I'm going to explain that a little bit further when we come back to the market. But that's really it. You just have to understand how critical this area is, and probably the next trend is going to take place off of however we react to this level on the SPY. And we're going to come back to that chart in a little bit, but that's just a little bit of a preface. But let's get started with crypto. Then I'm going to move into other markets. We will talk about the stock market. I'll go more in depth on that. And we'll look at some individual names. Fisker and Clov had earnings this week. Both have had nice moves since the earnings, even though Clov did give back quite a bit of that today, down 15%. I think AMC had earnings too, which unfortunately was down 8% today. And yeah, it's been a little bit of just like a choppy week, just watching some of these earnings go by. If you're in the Discord, I've been a little bit laid back. Shots laid back in the chat right now. But I've been a little bit laid back this week as well, just kind of watching the chop, trading a little bit here and there myself. I'm up slightly, but let's talk about what could happen going into the end of the week. Let's get started with crypto. You know, this is starting to look like a little bit of a diamond pattern here on the daily. I'm not going to draw it out, but it's just neutral. You're in between two major zones. On the daily time frame, I don't see any variables for either side. And on the 4 hour, I did draw out this wedge, I think on the Sunday stream. You broke out of it, you went up a little bit, but you're still kind of in this zone on the 1 hour, which you've been in for over a month now. And today, a new monthly candle actually just formed, and the February candle closed. So as you can see, that February candle, really not much. Very big indecision candle. However, that came after a 40% green candle the month before in January. So you can kind of see that this candle open and this candle close is acting as like a little bit of a resistance level for Bitcoin. And that's really it. I mean, above that, you have these like 2 wicks at 25.2K. Again, this is a monthly time frame. So we will see how this monthly candle develops in either direction. Yeah, one thing I do want to note, however, is like you kind of saw that volume was increasing on the monthly time frame for Bitcoin as you fell into this low. And then since you've been bouncing up, you've been well, actually, I don't know if decreasing was the right word. Volume was increasing. I don't know if I said increasing or decreasing, but volume was increasing down into the bottom for Bitcoin. And then since it put in that bottom, volume has started to decrease. That is something I am keeping an eye on. But you also, and again, this could take a long time to do anything, you have potential hidden bullish divergence on the monthly. And again, I mean, this monthly chart, it's pretty nice, honestly, because if we also draw out this harmonic pattern, you've got a nice bullish shark cipher, somewhat accompanied with that divergence, and you see a reaction around that area as well. So it's pretty good on the monthly. I want to see if this was a harmonic actually back over here as well. Of course, like that would probably look a lot better on the weekly, but nothing official, it looks like. So that is what is going on with Bitcoin right now. The short term, it's kind of confusing, but longer term, I think it does look pretty decent. We will see if the price action follows. Then we have Ethereum. This one on the 4-hour chart still has a little bit of an inverse head and shoulders look to it. So really it's, can you break above this $1,700 resistance before breaking under that potential right shoulder? So it's just kind of in between those. Again, just waiting for a move to either direction. That's really it for crypto right now. Let's move into the 10-year. Now this was a name going into the week that I thought we could actually see a pullback on. Was wrong about that. You kind of broke right above that resistance zone. Even if we go over to the 4-hour time frame, you were testing a breakdown from this wedge, but just nothing really followed. So I'm gonna kind of just redraw this for now. It's just an upsloping channel, and for right now you're above the major resistance. So your next big resistance for the US 10-year is probably around 4.24%, and then support is this little zone you just broke above right over here. And this is of course accompanied by some hidden bullish divergence as well, which is continuing the trend higher for right now. Then we have crude oil continuing to consolidate, nothing to really update on over there. Metals have bounced a little bit this week. You've got a little bit of hidden bullish divergence on the daily developing for gold. I guess you did get a little bit of a wedge breakout as well, right over there on Tuesday. And then silver, still kind of under, in my opinion, this really important support zone. So that's not good, but it's fighting to reclaim the 200-day moving average as we speak. The dollar currency index was another name I was saying going into the week that you could see a pullback on. And it does look like you are getting this bearish engulfing candle wedge breakdown with the hidden bearish divergence. So that is kind of playing out. All right, so we're having issues again, which make no sense, honestly. Like, at this point, I kind of feel like it's on the side of YouTube. I don't know why it's being like that. Because everything on my end is completely fine. I don't know. I think it's kind of better now, so I'm just going to keep going. But that's really what's going on with the dollar currency index. Finally, the Hang Seng Index, big bounce today, actually. Another one that might be kind of breaking out. Let me delete this previous pattern. Breaking out of a little bit of a wedge here with hidden bullish divergence. So that's a very interesting setup on the daily time frame. You're in an uptrend. You've got that wedge breakout, hidden bullish divergence on both oscillators for the Hang Seng Index. And I mean, if we really zoom out here, I'm going to actually look at this on the weekly time frame. It's like a inverse head and shoulders forming as well. So let me just draw that out. And then your neckline would be right over here. So you've got this weekly inverse head and shoulders developing for the Hang Seng Index. You are comfortably back above this 2-decade-long trend line after falling under it for a couple of weeks. Keep an eye on this. Let me take a quick look at a couple Chinese names right now. Let's look at XPV, Neo, and Baba. See how those names look. Stream's still being like blurry, I think, here and there. Let me see how this looks on my phone. Because my Wi-Fi is completely fine on my end. Yeah, it's just blurry. All right, so XPEV is in a downsloping channel right now. It's got this gap fill at 761. And then we've got classic bullish divergence developing as well. So I guess you have a little bit of a support zone here. If that breaks, then you'd think that the gap would fill next. But if you can hold that reverse here, could be interesting. If we go over to the weekly time frame on this one, I don't see any harmonics. I mean, maybe if we look at all of this as like that, nothing good. But that is one that's showing some variables. Neo, this was on the watch list going into the week just to see if it could bounce off this level. So far, it's not doing a great job of that. It's kind of under that, flush down 6% today. Looks like it had earnings today as well, so not a good reaction to that. At this point, I guess like you've got this little low here that you recently put in at 838 for Neo, which lines up with some highs from fall of 2018. But if you break under that, then you've got this gap fill at $8 under. So kind of on the other side of the fence, like for real at this point. Nothing much else to say apart from that. I mean, on the weekly, it's close to this supply line, but you're rejecting it for right now. Like you could have broken out of that the last month or so, and you just have not been able to. And then finally, for the Chinese stocks, before we head into the US market, we've got BABA, which had a nice move after breaking out of this huge wedge. But right now, it's kind of back under the 200-day moving average. Looks like it's been pretty volatile with earnings lately. A little bit of hidden bullish divergence, but just not a lot of patterns or things I can talk about for right now. So let's head into our stocks. Let's talk about the SPY first. Looks like it's looking better for right now. So quick what's up to Darwin the guy. Keanu, what's up? Your blind spot in the chat. Just another reminder, me and Keanu, or Keanu and I know he's very particular about his grammar, are doing a webinar this Sunday. I'm going to be talking about white coffee accumulation and trading psychology. He is going to be talking about his trading style. That link is in the Discord, and I'm also going to drop it in the chat right now if anyone is interested. Let's head back over to the stream and talk about the SPY. All right, you are very clearly sitting at the 200-day moving average. And the one thing that short term is okay to me is the fact that you bounced off of it twice now. That's good. That was last Friday, and today you got about 1/3% bounce right off of that level. So you are seeing some buyers stepping in there kind of right away. On the 4 hour as well, you have some variables. I'm just looking at the pros for the SPY right now, or the bull side for the SPY. You've still got this wedge, and you've got hidden bullish divergence. And then if we go down to the 1 hour chart, you can see it's really all about these two lows, which again, were right around the 200-day moving average, and whether or not they can hold. Let me make those a different color. So it's really about whether or not those two lows can hold. And we also have a little bit of classic bullish divergence on the 1 hour as well. So 1 hour classic bullish divergence for the SPY, 4 hour hidden bullish divergence, and then 200-day moving average on the daily. So you have some bullish variables, but again, it's a do or die area. At the same time, you're kind of in this wedge. It's a pretty small wedge. And if we zoom out over here on the 4 hour, you're also kind of breaking down from this much larger upsloping channel. So at this point you are breaking down, but again, like you're still in this wedge. I mean, you could still maybe break under this low, fall under the 200-day moving average for a little bit, drop down into this lower 390 area, get towards the apex of that wedge, and then bounce off this zone I have charted over here, this blue zone. You know, there's a lot of different scenarios possible here, which is why this whole entire area in general is going to be pretty confusing. In my opinion, it really comes down to whether or not we break under that whole entire area, which would obviously not be good, or break out of that whole entire area, which would be good. So that's really what it is for right now. You have variables for both sides. I think arguments can be made for either direction, at least on like higher time frames. Lower time frames, maybe we'll see what happens. And not really much of any volume signals or divergence to give you an extra edge on the daily. I could take a quick look at the Bollinger Bands. You are getting towards the lower, which is nice. This is the first time you've been at the lower Bollinger Band on the daily since your bottom towards the middle of December. And as you can see, most of the times you've hit the lower Bollinger Band, you've bounced off of it, but sometimes you could just drag or run down it. So it's not like every single time you touch, like it could just keep going down in the lower Bollinger Band, can just keep going lower until you eventually reverse off of it. But it's the first time you're at least falling into it since pretty much around Christmas last year. And of course that does line up with the 200-day moving average. So there is that. And that's really it for the SPY. The Qs are pretty much the same thing, also testing the 200-day moving average. If we go over to the 4-hour chart, it's not doing a great job of getting above this zone, which is something I was talking about on Sunday's stream. I wanted to see that happen. It really hasn't happened. So it's kind of creating a little support over here at 290-ish. You got to hope that that holds and you can maybe get back above the zone. That's really what it will come down to. So, you know, on the 1-hour chart, you've still got this wedge, potential double bottom, but you kind of like, this is the area you got to start going from. Otherwise, you break down from that support, and who knows, there's a lot of other levels beneath that. I think the next big zone is pretty much around 280, even though you have a couple levels in between. So that is the QQQ. I know the stream's going blurry like every 2 minutes. I don't know what to do about it because I haven't touched any of my settings either, so it's not anything like that. And then we have the ARK ETF. This is one where it's starting to show some variables that look different, because we can really start to draw this out as a larger bull flag over here, like this. Then if you start to bounce up a little bit, the MACD starts to lose its negative momentum. You can get some hidden bullish divergence on the daily. On the 4-hour, you've currently got classic bullish divergence forming. Let me delete this line. And if we want to look at it a little bit differently, I can, just for the sake of this chart, I can delete this zone for a second. We can extend this back to over here. Let me delete these levels too. You can see you've got somewhat of a right angle descending Browning wedge, kind of starting from right over here. You got about 3 touches on the top currently and 3 on the bottom. So at this point, any low anywhere above down over here, and then a move back up to test the breakout, will be about a 70% chance of breaking out, because that'll be a partial decline. So again, if this divergence on the daily and the 4-hour plays out, that bull flag plays out, you can see it on the 1-hour chart. This back test of the $38 plays out, which was a huge resistance until you broke it and have now bounced off of it twice. If those variables play out, you could see continuation in at least mid-cap growth stocks. Sounds crazy, but they did kind of lead and really outperform in January especially. So we will see. Let me just rechart a level right over here. And then one right over here. And then I'll make this green so it matches. So ARK ETF kind of doing its own thing, at least for right now. The Russell 2000 as well was green today, even though the Qs and the SPY were both red. It's just testing this 188 level. You can see this was major lows from last February, or February of 2021. Oh no, it was last February, and then it flipped into resistance. So that's your big level. Same thing here, make or break area. Yes, you are kind of testing that as a resistance. You did break down from this ascending wedge, but again, we can also create a new bull flag that's starting to form at the same time. So the question is, does this breakdown from the bearish pattern play out and then you just kind of do this? Or does the bull flag prevent that and then you kind of do this? It's do or die time for a lot of these indices, and we're kind of getting past a lot of economic news. Of course, new GDP and FOMCs and CPIs are always going to be coming out, but we already passed quite a few of them, and of course, we're pretty much past the majority of at least like the large parts of the earnings season. So now it's time to see how the price action follows. We've gotten a lot more information of, in terms of how Q4 went for both the economy and for individual stocks. Now it's time for both investors and traders to move the market as a whole accordingly, and we will see what that turns out into. But that's pretty much it for the overall market. We've also got the VIX. It did break down from that rising wedge / bear flag I was talking about on Sunday, even though the SPY hasn't really done much with that VIX breakdown. At this point, it's just chopping between like 18 and, let me take this out, between around $18 and, let me move this up, 23.66. I would say that's the kind of the upper level there. So that's your new range for the VIX short term. We'll see what happens, and that's really it for the overall market. Let's move into some individual names now. I did alert one swing this week. It is Square. Personally, I want to also make sure I do say I am in some Square calls right now. I'm down maybe a few percent, but they expire next week. And what am I watching on Square? I did talk about this on Sunday. We've got this massive cup and handle hidden bullish divergence. As of today, actually, you are testing a breakout of at least the handle part of the cup and handle. To break out the actual cup and handle, you'd have to pretty much get above 90, which is around that first and second target, but you could have some resistance there, as you see. That's why the first and second targets are right over there. But yeah, it's trying to break out of the handle. I do also like the fact that not only did you break above the 200-day moving average, you kind of fell back into it and then bounced off of it. You can see that 4-hour channel a little bit better. Let me just redraw this just a little bit, where you are testing that breakout. You've been testing it throughout the week. And then even if we go over to the 1-hour chart and see that one more time, but you've also got this like scuffed inverse head and shoulders look to it. This is kind of what sealed the deal for me personally on getting into calls. It's a fully riskable position for myself, but you've got variables on pretty much all the time frames. Even now, some 1-hour hidden bullish divergence is starting to develop. So it's a pretty stacked chart in my opinion. You didn't even really feel this gap either. You've got some short term, I think on the 15-minute I charted it. You got this little gap zone over here where you put in like 3 different highs around 78, but this gap is actually around 78.5. That hasn't filled. You just put in 2 nice lows around 74.60-ish between yesterday and today. Headed back higher despite the market selling off. So I feel like it's starting to show me some variables. I'm in some calls. They could fail. We'll see what happens. And that is Square. Let's see how some other names have done throughout the week. Tesla, let's go down to the 1-hour chart. It did actually gap up to break out of the triangle I talked about last Sunday or this Sunday, 4 days ago. Had a nice start to the week, but it's been pulling back since. On the dip, you never actually filled this gap at 197 from that gap up on Monday morning. So that is a little bit of a level to keep an eye on. But it's just kind of creating a new chop zone, if you want to look at it as that. We also had Amazon. There you go. The wedge really hasn't, or the initial way I charted the wedge really did not do much. But at this point, you do have triple classic bullish divergence on both oscillators, and the wedge could be redrawn. So it's not fully over. You're also right out of support, which is 91.43. You're sitting at support with triple classic bullish divergence. You're still in a wedge. I don't think any official harmonic. You'd have to go a little bit deeper for that, I believe. You'd have to fall down to about $88 to get a Gartley, but the variables are still there. It's just kind of sold off a little bit more throughout the week. Google, let's go down to the 1-hour. This one did kind of play out a little bit, bounced up off of its wedge. It's up slightly. It's up, to a couple percent this week, but still nothing too crazy. Meta, another name, gapped out of the wedge, went up about 3% and then pulled back today with the market. Still have that open gap to fill at 170-ish, just under that. And AI, this was one I was saying, I just want to wait to see which way it breaks. It tested the breakout, now it kind of tested the breakdown, but closed with a very, very small 4-hour bullish hammer. So this one, we'll see. This one's kind of at the end of this pattern, so it has to break in either direction by the end of the week. So this will break out or break down by the end of the week. You will see. So still watching that. And now let's look at some of the names that reported earnings. Fisker, huge gap up and move off of earnings. Pulled back a little bit since then, but still a pretty solid week. And it's now back in this range. So I'm going to be talking about this on Sunday in the webinar. I dropped the link for the webinar in the chat if anybody wants to sign up. But this is where it gets interesting, because we've seen this before, and it led to my second best trade ever and an amazing swing that I put out as well. We've seen this before on Fisker. All right, let's go back to the past. Right over here. Fisker had Wyckoff accumulation over here. This was like the first time I started talking about Wyckoff on stream. You can see what happened after that. This was the move that followed. And right now, we could potentially be just past the spring phase of Wyckoff accumulation. All right, so let's have some fun here. Again, this is just wishful thinking somewhat for right now. But with that move back into the range, okay, we could see this happen. And I was called crazy the first time I showed this when Fisker was at 15 and then it went to 30. Maybe some people still think I'm crazy for this, and now that Fisker's down at $6, $7. And I could be crazy, I don't know. But it's got some variables that are very, very, very interesting. All right, I'm not going to be able to line this up perfectly just like right now, but you can see what I'm talking about, okay? It could take some time. It's only a start, but keep holding above 650, maybe even retest it, bounce off of it, and we might be coming back to this chart to talk about this very soon. That's all I'm going to leave it at for right now. I'm not posting this on Twitter today. I'm not sharing this in Discord. Just a little treat for the stream. That is something I am keeping an eye on, but it needs some more time. All right, and then clov. Huge move off the earnings yesterday. Was up 15% at the close, but at the highs, it was up about 21%. However, today it gave back a lot of that, almost all of it. So, yeah, it did have a wedge and classic bullish divergence, which I did talk about on Sunday night going into earnings, which was interesting to see. Like, oh wow, if you didn't even know clov had earnings this week, this would have been the most beautiful wedge of all time, because I even charted out this resistance going into this week as well. And look where clov topped out after earnings. Again, did clov go up because of this wedge? Probably not. But did clov top out this area because of that resistance? Also, maybe not, but the level is what could have helped you time a trade, even if you were just trading earnings. That's not financial advice. I'm not saying you should have done that or you shouldn't have done that. All I'm saying is, in hindsight, playing the wedge up to the resistance, of course the earnings helped it out, but you can see that it respected both of the levels, and it's just a little cool. You can call it a coincidence, you can call it whatever you want, but it's pretty interesting to look back at in hindsight. And now it's probably it's exceeded the gap fill from the gap up on earnings, so now it's just kind of back down to where it was before. So I don't know if I'd say a cup and handle. I don't know if people are posting that right now. It's a little bit deep on the handle, but just for fun, I'll leave this on my chart for a little bit and we'll see. All right, so that is Fisker. One swing that's already hit a couple of targets, actually 2 out of 3 targets, is Roblox. I just want to come back to this. It is trying to back test both the 200-day moving average and this channel breakout. I don't think it perfectly filled this gap. It very, very slightly missed this gap fill, but I am also watching this one. It's starting to see some nice bounces off of these levels. Could maybe curl back up, fill a couple of these gaps if it can continue to hold that little area. Where you are seeing some demand, and even historically you've seen, look at this low, look at this high, look at this low, look at these highs over here. You've seen a lot of price action moving off of this level, so it's a very interesting level for Roblox. All right. And what else is going on? Apple giving up the 200-day moving average and that little range it was in. So Apple's kind of testing this breakdown, which, you know, being probably, I think, the largest holding in the Qs and maybe one of the largest in SPY as well, is not a great sign. But you've given up the 200-day moving average. This little support you had around 147, 148, and this was your lowest close on Apple since pretty much the end of January. So there's not a lot of support here either, and if we really want to kind of go down to other time frames, you could also look into this potentially. Let's put out this zone over here will have very, very clear resistance. We could just look at this as a range between 135 and this zone at upper 150s, but also, let's say the SPY breaks the 200-day moving average, that 4-hour channel on the SPY, let me show it to you right now. This 4-hour channel, it breaks down, all of this fails, it doesn't hold this support, the wedge does nothing. Let's say all of that happens and Apple keeps selling off, right? Then there's also the potential for that, a potential inverse head and shoulders. So I don't know if that's what Apple is going to do, but you've done 2 out of 3 steps. So if it does continue to sell off, that 135 level is going to be absolutely key. So just for fun, I'm going to leave that up on my chart. We'll maybe come back to that in a couple of weeks, see how it's done. And of course, it doesn't have to go all the way down to that level. It doesn't have to be a completely parallel inverse head and shoulders, but that is kind of the next one. And did I miss any ones I want to talk about? I think that's pretty much it. So that's what's going on right now. Lindsay Glenn says, just got the notification you went live, but I'm half an hour off. Stupid late notifications. Yeah, YouTube's been weird lately. We could always watch the replay. Maxime says March 14th is the next CPI, and the 21 and the 22nd are FOMC. Thank you. We did look at the daily on the VIX. I don't see much of a cup and handle. I think you're probably just calling like this little rounding bottom here into this a cup and handle. It could be. It could be. I mean, honestly, I could definitely delete this wedge at this point. But if we go over to the 4-hour, I was just looking at it more of like a range. But yeah, you could have a cup and handle in range, but you also have like this rising wedge. So I just want to see which way that breaks. Also, if you see the pin chat, there is currently a 40% sale on annual premium. That means about 11 to 12 webinars, which are included with that. Options, swings, watch lists every single week. An amazing community in chat. Like this week is one of the first weeks in a while it's been tough for me to be active. But the chat's just been super active. A lot of people helping each other out, talking and stuff. So it's just a great vibe overall. If you want to join that, it's 40% off annual, which is already 30% cheaper than monthly in general. Annual is always 30% cheaper than monthly right now. And then you get another 40% off on top of that. So yeah, that sale is going to be ending this week. So it's pretty much your final chance today and tomorrow. If I do go live tomorrow night, which I should, then I will remind you about that. But it's a pin chat. If you want that coupon code, you have to use that link. So go check that out. And if you want to join, it's up to you. Jan in the chat says, I wish it lagged during clov. But yeah, I just did a webinar pretty recently on charting zones in premium. We have the amazing chat. I'm not going to show the swings, but they're there as well. The options, they look like that. These are the last 21 that I've alerted. Past results are not always indicative of the future. It's not going to be like this all the time. But it's been a pretty good year so far for those, to say the least. The worst loss was about a 25%. So pretty good results so far this year. And then of course the weekly watch list. This one I think is pretty underrated in my opinion. I put a lot of work into scanning for these, and a lot of these eventually turn into the swings I alert inside and outside of premium. So these are just really good to see like what types of charts are showing variables in either direction that you should be keeping an eye on. And then of course the bullseye I bought from TradyTix. All of this plus the monthly webinars. Let me see what this sale comes out to. Comes out to $300, which is less than $1 a day. Usually it's going to be $500 to sign up for annual, but if you use that link in the pin chat just for this week, that $500 goes down to $300. So you're saving $200. And by the way, that normal $500 price is already 30% cheaper than if you were to be in monthly for a year. So start taking it down by like it's a lot lower for everything that you get. So if you want that, you have pretty much this week. I don't know when the next sale is going to be as of right now. All that stuff for less than $1 a day. And yeah. Thank you for watching the stream. Hit the like button, hit the subscribe button. The links are in the description. And I'll see you later.